Hello everyone, welcome to the channel. Yesterday our analysis was spot on. We wanted to see a liquidity sweep and we wanted to see a drive up. I also told several videos of our past which covers that last candle can act as either your demand or your supply. So morning itself I closed my trade somewhere close to here and I made a video also explaining the reason behind my trade. I hope you had watched the video. If not, I will request you to please go and watch that video once. See, videos like this are made to make sure that you understand the concept. So now there are quite a bit of imbalance left out in this move. So what happened today is market did a liquidity sweep, went up, and this was the demand which I had marked yesterday and gave. Market correctly tapped into this and did a sell off from there. So now what next? What can happen in the market? There are only two possible scenarios what can happen. Okay. So one thing is if market opens flat and comes down and gives a strong closure for 30 minutes below 2300. Okay. Then on small pullback, I am interested to take the market down till 23,000. This is scenario number one. This is very clean and this is not much of a problematic situation. The problem happens if market opens flat and goes up. So what is the plan of action here? If market opens flat and goes up, what zone should we choose from? So we can clearly see there is a supply zone sitting here and there is a supply zone sitting here. The reason why I'm saying supply zone is you see a small red color bar, right? This bar is nothing but if you see three candles between wick of this low candle, this blue candle, and wick of this red candle, there is a gap which is left out, which is not yet filled by the market. What these gaps are nothing but if big institutions have stepped into this place, creating huge amount of orders, all their orders will not be completely filled. Okay, if they have wanted to punch in, for example, crores and crores of worth of money into Nifty with respect to a sell order, all their orders would not have been filled here. So that for their initial, for example, 10,000 orders, market would have made a drive down already. The rest of the limit orders, whichever they have put here, those market will try to fill it before making the actual downward move. So what I mean is market will go and fill this imbalance. Always if it will go and fill any kind of imbalance in the market. Imbalances act as your magnet in the market. Okay. But if you take these two imbalances, one here and one here, this is Nifty's 30 minutes chart, by the way. If you take these two imbalances, which one should you sell the market from? Meaning, which one should you execute your order from? Should you execute from this place or from this place? The answer to this question is simple. This is an invalid imbalance zone and this is a valid imbalance zone. Why is this zone invalid? There are two reasons behind that. One is there is relative equal high sitting in the market. Okay, this will act as your liquidity. So what happens during liquidity is market will tend to hunt this liquidity, make you think that market is going to go up, but market will start to reverse from the actual true zone. Okay. Second point is this is not a proper supply zone because this did not create a change of structure. Structure is sitting somewhere here. Okay. If I draw you the clear line saying the structure, market started from here, went up, came down, right? Then went up. Consider this as one wave. Okay. Now this is your low, this is your high. Then it created a higher low, then higher high. Then market tried to go down, but did it create a break of structure here? The answer is no. So since it did not create a break of structure, this zone eventually becomes invalid. And also given the fact that there is relative equal highs which can act as your liquidity, market will not respect the zone that much. So ideal to ideal traders, if market goes up, let it go up. Do not chase the market for tomorrow. The moment we see a reaction like this in a lower time frame, I am interested to take the market down. This is going to be my A plus trade for tomorrow. So the best case for this to happen is if the market opens pretty big gap up. Reason why I'm saying market should open pretty big gap up is where we have closed is 23,180, 190, somewhere there. That is our closing price for today. And where is the supply zone sitting is somewhere close to 23,350. This itself is 150 points movement. So we cannot expect market to go up 150 points, okay, and then give a negative reaction and then start to come down 300 points. Tomorrow is no expiries. Tomorrow is just a Friday, okay. So market can also not react anywhere in the market tomorrow also, meaning market can even be range bound like this without giving any movement because market participation might not be there. There are two things why market participation may not be there. If you see, I'll just switch to 1 day's time frame to give you a better clarity. So if I go back to 1 day's time frame, yesterday I said one point very clearly. Last 3 days, what is happening in from a day's chart perspective is market is opening somewhere here, going up and then coming down and closing almost in the same place. Opening here, coming down and going up and closing almost in the same place. Opening here, going up, coming down and closing in the same place. Same to same happened today here also. Opening here, went up all the way and came down and closed almost close to the same opening price. 4 days, buyers and sellers have literally fought in the market left, right, center. Okay. The reason why this kind of a fight happens is Tuesday there was a Nifty expiry. Today there was a Sensex expiry. There was a huge fight which was happening. If you see Sensex price, all the at the money price for put call, everything went up with respect to CE during the upward move, like 1:6 times, 1:7 times, and it all came down back to zero. You would have seen this if you had traded in Sensex. You would have seen that today. Okay, the reason why we are emphasizing this point is because of all this fight, huge buyers, huge sellers, they would have been in profit or they would have been in a huge loss. If you had anticipated huge sellers to make money, the reason why they sustain in the market is they know that they don't want the market to go beyond a certain level. So that is the reason you see that heavy selling pressure always comes, heavy buying pressure always comes, heavy selling pressure always comes. All these is because of huge quantities being entered by the market. Because of the huge participation already happening for the last 3 days, market can become range bound like this because they would have eventually given up this week because they have already made enough profit, and they would think like next week I will make the market to go up like this. This is what will happen. So if you are wanted to be in an extremely safe side, draw a box like this. Okay, the upward box for this would be 23,530. The downward box for this would be somewhere close to 23,000. Between 23,000 and 23,500 for the next coming days, even if it is taking 1 week's time also, you can avoid trading. That will save your capital. When 23,500 is being broken, you can see a very big movement till 23,800, 23,900, 24,000. This can easily go up like this, keep going up like this. Okay, so when this big move happens, you should have capital to trade. When this kind of a volatile market, if I show you back in 30 minutes time frame, see what has happened. Started here, went up, came down. Okay, this is 1 day. Okay, what happened the second day? Started here, came down and went up and closed here. What happened the third day? Started here, went up and came down and closed here. It's all kind of a one kind of a V shape, inverse V shape, inverse V shape. Now again, if you see today, went up, came down. This is what is happening. So tomorrow, if the same pattern is going to be followed, one of these two possibilities can happen: go up and come down, or second possibility is come down and then go up. These two are the possibilities. So those two possibilities is what we discussed in a lower time frame also on how to trade, how to plan our trades also. Please spend time in charts. There is absolutely no necessity for you to blindly enter into any position. Do not have any kind of a FOMO into the market, saying like market is going to go without you, you should also participate, make money. If your setup does not align, you are not going to trade. Simple as that. Okay, I hope this video is educative. Thank you so much for watching. We'll meet in the next education video.